welcome back to the Fourth Revolution, where we discuss stocks for your portfolio of the future. Today we're doing a Know Your Options segment, and I'm going to focus on QQQ puts that are lining up for a nice buy right now. So the markets are looking quite stretched. The S&P 500 and Nasdaq 100 are trading right around record levels, with the Nasdaq 100 sitting at overbought levels with an RSI right above 70, and I think the markets are in for a pullback. We're entering the seasonally weakest month of the year, with over the last 40 years, S&P 500 has lost 70 basis points on average during September. And, with all the self-fulfilling prophecies occurring over the last, 18 months, I think that even if there isn't a reason, the markets are going to pull back a little bit this month with no big economically positive news coming out of this. I mean, we've already priced in the recovery from COVID. We've priced in a tapering timeline. And I really think that everything is priced in, and more so. I think it's time that we take a step back and look at either a consolidation or a broader market pullback. And we would profit from either with this QQQ put spread that I will be presenting to you. But I think right now, like I said, is the time to jump into this. And you can see it with all of the volume driving into these options. We have 2.5 times as many put options in this October expiring put that I'm going to be referring to than the calls. So there's so many more people driving into these puts to hedge their portfolio in these uncertain times. And like I said, it is prudent for you as an investor, especially if you have a tech-heavy portfolio, to do so. And even if you don't have any holdings, I mean, this is a good trade, I think, to be involved in. So let's take a look at the charts and take a look at the opportunity here. So here's the chart of the Nasdaq 100, and obviously we've been on low volumes. You can see it with the QQQ here on TradingView. This is 30 minute. Let me get up a day chart. You can see volumes have just been dwindling since the peak of earnings season, and is going to continue that way until some serious news hits the fan. Tomorrow we have obviously the August jobs report, which could be a catalyzer for a price movement, as it will be an indicator for the Fed's next monetary policy move, which is to taper. But like I said, let's go back to the Nasdaq 100. This is what we're going to be utilizing for our put. You can see this thing has just ripped up since mid-May, and we are in for a pullback. This thing is overbought, like I said, trading over 70 RSI, which is the relative strength index, and that is an indicator of overbought territory. And we've kind of done this over the last few days. We've gone up on open and then fallen after reaching these overbought levels, and this is a huge indication of uncertainty in the markets. And a Hindenburg omen has actually been seen, the Hindenburg omen, should I say, which is a sign that the markets could be in for a significant downfall. It's an indication of uncertainty in the markets and kind of wavering consumer sentiment. So it's seen when there are an elevated number of record highs and lows at the same time, as well as consumer sentiment and market sentiment kind of diving, while at the same time the 50-day moving average moves up. So we've seen that over the last few weeks multiple times. And it could be an indication. It says that 25% of the time this omen has accurately predicted a market downfall. We will see if that happens this month. I am not seeing something as far as a downfall, but I wouldn't be surprised if we saw a 5% pullback, and that is where this spread comes into play. So I'm looking at it here. This is QQQ on Fidelity's research tool, and the option is going to be a buy on the October 15th, which is the monthly QQQ options, with a strike price of 380, and we will be buying that for right around 775, and then we'll be selling the lower strike of 370 at right around $500. And you can see the chart here. It'll return us. So pretty much we're risking 200 to make over 500. On this trade, and it's nicely lined up because of the interest that we're seeing in this in these puts. Like I said, there's 2.5 times as many put options as there is call options on this specific specific expiration for the QQQ, and it's kind of given us an elevated level for these for these, out of the money puts, which provides us with this spread that I'm presenting you today. And this is a nice trade for a security that's kind of overstretched and overheated. And I think that this could be a valuable opportunity, even if you aren't hedging your portfolio. So the reason we do a put spread opposed to just a naked put option on these QQQ October expiring options is to limit your downside. This matters a lot more when you're trading higher volumes. Obviously, when you're trading small amounts of puts just to hedge your portfolio, you don't care as much about losing the entire premium because you make it up on the other side with your stock positions. But this is more of a trade than I'd say a hedge. It is a hedge, but I mean, this spread is more of a trade position because, like I said, you limit your downside with a sizable upside. So with the premiums being this high, I see this as a very prudent opportunity to scalp here, especially as we come closer and closer to expiration. And with 2.5 times as many people in these put options and call options, there is definitely a number of money managers that are hedging for uncertainty ahead, especially with that Nasdaq 100 bouncing off these overbought levels. Literally every time we hit this 70 RSI, we see a sell down. It's like literally like clockwork because we are in this dubious period of market uncertainty and kind of seasonally lower volumes. So check that out on your preferred trading platform. And don't forget to check out Zacks.com/promo, where you can get Tracy Reineck's Value Investor Portfolio for 30 days of free trial. Don't forget to check that out. Like I said, Zacks.com/promo. Thanks for watching, guys. Look forward to seeing you guys next time.